Hello and welcome to ATFX's CPI preview. So just to give you a brief idea on what we're looking at today, this is the CPI Consumer Price Index is probably the last piece that we're looking at before we get to next week's key Federal Reserve rate decision. And most people, as you know, if you've been watching us, it will be a cut. But we've had three pieces of information already so far, which are the main bits of data. There's been plenty of US data, but the main pieces we've had is the PCE inflation data. That's the Fed's favored inflation data. We've had the employment figures, which came out last Friday. And tomorrow, we're due to have the CPI numbers, which is probably going to be the last piece in the puzzle, which tells us whether the Fed's going to cut by 25 basis points or by 50 basis points. And because of that, that's what the market's really looking at. And that's where we're going to see some really big key moves in the market. And what we'll do after that is we'll look at some of the currencies where we can see some trade opportunities and where there's going to be the ability for people to make money in this market. So before we get cracking in there, I'd just like to invite you all to subscribe to the channel. That will make you eligible and give you updates on when we're going to be doing more of this in-depth fundamental and technical analysis. So any issues, you can always just get in contact with us. Right, now let's get cracking into this CPI data. So the first thing we need to look at is the importance of this data, and it is very important data. This is, even though the Fed's favored indicator is the PCE number, the market at large probably prefers CPI. If you look across the rest of the jurisdictions, the rest of the major economies in the world, we're always looking at that CPI data. And this is going to be a very interesting one because expectation is for the core month-on-month number to remain just an increase of 0.2%. Also for the headline number, the CPI number, 0.2% increase, with that year-on-year number coming in around 2.6. So that is showing the slowing that the Fed is looking for. But if we do get anything significantly away from those expectations, and all three of those numbers are very, very key, we should see some big moves in the market. So we're going to look at a few of the different charts that we've got ready to go here. And there are going to be some great trading opportunities. The first thing we need to look at is what moves we've seen in the market over the last couple of weeks, specifically with relation to the dollar. Now, last couple of weeks, we've seen a very, very sharp deterioration in the dollar's value against most of the majors. Now, that's been because data has fallen off. And even though over the last quarter or two quarters, when data's fallen off, the market's taken it as a good indicator that we're going to get Fed cuts in the next few months, and we're definitely going to get one next week, let's be honest, and that will stimulate the market. But now that stimulation sort of plan was seen as a good thing. Now we're finding that the Fed's going to have to cut because things aren't looking so good over there in the States. The market was expecting, and it got to about a 50-50 level for a 50 basis point cut, which would stimulate the market, and it would see stocks probably go a bit higher. But now it's seen that if they have to go 50 basis points, then it's because there's a bit of an issue. So that's where the market's juggling expectations at the moment. Last few sessions, we've seen the dollar appreciate because the non-farm payrolls came in slightly weaker than expected, but nowhere near as much as most people feel will make the Fed cut by that bigger 50 basis point. So now we're looking at 25. So expectation in the market just at the moment is about 70% of the market. The odds are 70% that we will see a 25 basis point cut and 30% for a 50 basis point cut. So there's still a chance in there that we get a bigger one. And this is the final data before we get that sort of Fed rate decision. So I'm just going to skip over now to the first of the charts, and we're going to, for us here in Australia, we're going to have a little look at the Aussie chart. I'm going to move over to that, and there are strong trading opportunities in the Aussie and indeed in most of the other major currencies at the moment. So here we have the Aussie chart. This is the longer term one. As you can see, Aussie's come back off that 68 cents level, and it's now sitting just above the 200-day moving average, which comes in around 66.20 level. We're at 66.15. We've had a good move down. Not expecting to see too much, all things remaining equal, with the Aussie, but it does open up moves either side. So a weaker print from the CPI should see the Aussie gain ground, move back up to this 68 cents level, this trend line resistance that's coming in high 68s. A stronger number, which will probably lock in that 25% basic 25 basis point cut will probably see us move down through that 66.20 level and look maybe to challenge those 65 levels as we move forward. So a couple of other charts that we want to have a look at. Have to have a look at cable. Cable's been moving around a lot, as we know. Most of the moves have been on the dollar, but a lot of traders out there are looking at cable and looking at the sterling in particular, and not always just against the dollar, but it will be a dollar focus now because sterling numbers are holding in quite nicely. And we do have some key sterling data coming up in the next couple of days. We've got employment claims tonight, and we've got the GDP. That all comes before the CPI. So that will affect the sterling side of the trade. And then the dollar side of the trade is going to get hit by that CPI number. So we could see volatility. Once again, we're on the longer term trade here at the moment. We're back in the middle of this recent range, but resistance coming in now about 132.50. That's not too far away in the bigger scheme of things. And because we've got that key UK data and the CPI coming up, expect to see fluctuations in this range before the CPI numbers come in. So plenty of opportunity. Once again, weaker CPI, we're going to head back towards that 132 level. Stronger CPI, it will take us lower, but it does depend on what we see from the from the UK data approaching that. We're now going to have a quick look over at euro. Euro is going to be very, as most people know, it's the most traded currency out there, and it's sitting in another interesting point as well. It's sitting mid-range again, similar to sterling, similar to Aussie. This pullback in the currencies as the dollars appreciate, and it appreciated 0.4% against most of the basket of majors last night, has us sitting in the middle of range. So it does open the scope for decent moves after the CPI number. Weaker CPI, bang, we're going to be back up challenging that 112 level. Stronger CPI, all things remaining equal, back down towards this 109 level. It really is that important. I suppose the damp squib out there would be if we come in on expectation. My feeling is if we do come in on expectation, it is that 0.2, it is that 2.6 on the year on year, then we're probably going to see a continued just appreciation in the dollar, probably take us down towards this down through this 110 level, maybe down to 109.50 as we move into next week. But once again, as I said, euro, you've got to take into account what happens next from a data perspective, and it is big data. We've got the European Central Bank decision on Thursday, so that comes after the CPI part. That euro part of the game could be very important. We are expected to see a cut from the ECB, so a cut could take us down. And the interesting thing about the euro at the moment is we are just sitting on these recent lows. Could see a little bit of a breakthrough here even before the CPI number. So plenty of potential out there. And I'm just going to take us through to our final major of this video. And this is probably the currency with the most propensity to move. And I say that because it has been the mover and shaker for the last, well, let's be honest, for this year. So over to dollar yen. I've got us on the short-term hourly chart because there's plenty of trading opportunities here. It will be on the back of a dollar move. We haven't really got much Japanese data out this week. We're looking at the Bank of Japan, estimations coming out of Tokyo that we might see a hike. So what I think the trend followers are looking for from this CPI data is a weaker print. A 0.1, a 0, even a negative would really see us off to the races. Or, a much lower print on that 2.6 year on year. We're just off these recent lows. And if looking down here, look, we're just underneath 142, the figure, 141.77. Look at these lows that came back from August on that deep, deep crash early in the year. And we're just, if I can get a number popping up, I can't, but it is just beneath that 142 figure. A weaker number in CPI leads us towards possibly the 50 basis point cut. Combine that on an interest rate differential front with the BOJ hiking rates, maybe twice before the end of the year, we should see a break of these lows, these 141.70s, a break of this trend line support, and it really does open the way for a bigger move to the downside. So out of all the currencies, I think the most propensity for a move on a shock CPI number is going to be dollar yen. Anything comes in equal, we will see moves in all the majors. Anything comes across as equal to what we've been seeing before, then I think we're going to be back in those ranges, waiting ahead of that Fed move. that's pretty much it for us on this CPI number. But it is crucial that you're looking at this number when it comes out. Trading should be really, really interesting. But once again, thank you for tuning into us. Please subscribe and like. If you've got any questions as well for the team, please throw them in the comments and we will get back to you as soon as possible. I think this is going to be a really great trading opportunity. If you need anything more from us at ATFX, please do get in contact. Thank you very much.